Welcome everybody. How we're doing? Really sorry about that late start there. Was having a couple of internet issues. Um, Had to do the old unplug and replug on the router though, and I think we're good here. How's everybody doing? Oh, doing good. Aaron, Roberto, doing good, doing good. Ramsey, you can't unmute yourself? I don't know. That's crazy. Oh, because I checked the box where you can't. Now you can. I've been liking the unmuted mics in here. I mean, other than when old Roberto starts talking, but you know, it is what it is with that guy.
I was just trying to say what up, but I guess I'll take that personal, man.
Yeah, you should. I still take that chicken personal.
Oh, don't you even start.
Weeble on a heater, huh? Yeah, right. Ramsey's Raymond.
No, no. He said, "Oh yeah." No, I'm not Raymond.
Oh yeah, that's him. Uh-huh.
Oh no, it's not me.
Welcome everybody. I see a few more people rolling in. Just to let you know, we're gonna be, we're running slightly behind. I apologize for that, but we're gonna give it a few more minutes. Raymond, you see they got XRP futures now from the CME. Pretty wild. Actually,
Yeah, it's pretty crazy, man.
I haven't looked at the pay on it. I forgot to check it out. I was wondering how they were gonna do it. Wow, a tick is a whoa. Wow.
I can trade that on top.
I don't know, but the amount of leverage involved on those is downright terrifying.
Yeah, I won't touch it.
Dude, every thousandth of a penny. No, let's see.
Well, you got
Point
to think
zero
it's worth what? How much is it
point
now?
zero
XRP?
zero zero five is gonna be your tick on there. And you're getting 25 bucks a tick.
Nah, that's crazy.
That means for every, what is that? Hundredth of a penny, tenth of a penny, you're making or losing a hundo. That's terrifying.
Yeah, it is pretty crazy. I won't do it.
No, I wouldn't. What if they got micros? They got micro Bitcoin features. Oh, Burnt Peanut. I saw that name change, Burnt Peanut.
What up? What up?
How
I've
we
been
doing?
on just MES. You already know.
Yeah, I would not be touching those XRP ones. That's terrifying. No volume in there yet.
Just buy XRP, the crypto, bro. What's up with this? What is this? What are we looking at here?
This is futures.
XRP futures from the CME.
Oh my God, are you kidding me?
Yeah, that's some high risk stuff right there.
Yeah, I'm
like,
cool on that.
Dude, this like a 1 penny move, like that's insanity. That one penny is what is that? That's 10 points. 1 penny is making or losing you 250. That's wild.
Yeah, well. That's for
Hey, honey, we lost the house on XRP futures.
Right. I mean, like this move just today on these things, that was just insanity. That's a lot of money made or lost right there. Nice, Aaron. That's a sick entry on ball. Boy, oh boy.
I was just thinking of getting shares this morning. It's crazy.
Yeah, I think that thing will pull back. Nice. Yeah, Pep doing it. Yeah, and I saw that it kept going, but KO ran with it yesterday, but clobbered today. But yeah, nice run on that Pep. I think we talked that one last week. Well, I mean, you and I have been talking it for a while, but you give something a 2 month consolidation, and when that break comes, it's likely going to be a pretty dang strong one. VSAT. Oh man, I forgot you gave me the buy-in not iron alert today. That was a sick one. Huh. Where was the iron not buying alert back here at 1263? Oh, Crash Miss, I can't even lie. You want to, dude, no joke. Like, no joke. Right here, I stopped out of this fucking, I stopped out of those snaps, minus like 85%. I bottom ticked it. The day I finally decided, no, I got marked the bottom. Nah, I just needed this one back here. This is where the entry was on that thing. Welcome, everybody. How we doing? Yeah, snaps been moving. Can't believe I cut this. Yeah, Walmart thinking about it. Same deal. Super easy short. I think 1K hammered this one the other day, off that 99. Such an easy short up here, you know. I do still think, you know, obviously longer term bullish on Walmart, of course, but we're gonna need to see some strength out of there for sure. But definitely needs a bit more pop. I'd love one more dump down here to 94. So that'd be a nice little third test. Well, you know, third, fourth test at the bottom of that range. Could go on a ripper off of there. Not saying we get it, but that's what I'd love. It is kind of holding up there, the mids though. Give me one more second. Gonna make another post, and I don't want to make you guys wait too long. You already waited on me, and we will get rolling. Supposed to be posting jokes in there. Okay, and with that, welcome everybody. Happy to have you here again. I want to apologize. For the delay in getting the class started. I don't know, had something going on with the internet. The old plug and unplug got us rocking and rolling though, and so back on track. But thank you for being here, Dirty River. Happy to have you tonight. We are talking support and resistance. I've you know I don't want to say that I do support and resistance different than most people, but definitely for most of the people in OT, I definitely treat it a lot. Much different than everybody else. Basically get nothing as far as support and resistance off any of the shorter time frames. I might jump down to a 4 hour if you know, we're at all-time highs, things like that, or maybe I want to, you know, take some of that aftermarket data because, you know, obviously daily candles don't include any of that, you know, pre-market, post-market stuff. So sometimes I'll jump down to the 4 hour if I feel like, you know, we had a big move and I want to get the levels out of there. But for me, it's all long time frame stuff. I know a lot of folks get hung up on, you know, their 15-minute levels and their hourly levels and things like that. And while I do think that there's, you know, a time and a place for those levels, and we'll obviously talk about it a little bit, you know, support and resistance lecture today, we will be touching on that as well. But for me, bread and butter, like I said in my post, always daily levels. They work time and time again. I think very oftentimes people will get hung up on short time frame charts. And you know, when I'm discussing short time frames, I'm still talking hourlies. You know, overall things like that are shorter time frame. We can actually use this Walmart as an example. You know, in all honesty, use them out to the hourly, and we very quickly can see that we're in a nice tight range. Yeah, I mean, not super tight, but a nice range right here. We know where we want want to be dip buyers anywhere down here, that 94 to 93.60 area. And we know where we don't necessarily want to short, but where we don't want to be getting long is going to be up here, this 98 to 99 area. Does the breakout or breakdown come eventually? Absolutely. But we don't, we don't want to be the ones long in the tops and short in the bottoms or anything like that. And on the daily time frame, it's very easy to see. Well, maybe you only, maybe you really mostly look at your hourly charts and, you're looking at 20 days of the hourly chart and you say, hey, nice downtrend is broken. We've gone up and we're consolidating. And you might think that this thing's super ready to just break out and get ready to start flying. You wouldn't even have this gray box on there because you haven't seen it on the daily. So you might look at this chart and start to say, okay, I'm buying dips for this Walmart breakout. Well, as soon as you zoom out to the daily chart and you can, very quickly identify the range that we have been trading within, you start to feel, or you should start to feel a little bit less confident in that breakout coming. Of course, can still be a dip buyer down to these areas looking for the move to the upside. And so that's what I'm going to talk about, identifying these levels, identifying these areas where we want to be getting into trades. And how do I do it from the daily time frames? So with that, if there's no questions before we get started, let's see, do I use Thinkorswim? Yep, that's what this is right here. It's my favorite. I think it's, professional level brokerage that they give you for free. There's no monthly fees or nothing like that. So, Weeble's fine. Weeble's fine, Robinhood's fine, all of that stuff's fine. But they limit you in certain ways. One of them, they close your same day is 30 minutes to close. I won't necessarily say that's a bad thing. I think oftentimes it probably saves some people from letting contracts go to zero, but you are being limited by your broker. And so for me on Thinkorswim, I have never run into the situation where, my chart didn't have anything I could need. The active trader couldn't handle anything. They aren't forced closing my contracts. I mean, you got to deepen the money contract into close and you don't have the money to buy those shares that, they will close that on a margin sell order, but you can do whatever you want. So that's why I love Thinkorswim. And then, as I said, it's free. So free brokerage, what more do you need there? And so with that, let's get to charting. So let me think. I normally do SPY, but unfortunately, because SPY is trading at all-time highs, let's actually switch it up. Let's hit up Apple. I've been preaching Apple here for the last couple of weeks that you need to be dip buyers, anywhere that 195 to 200 zone. And so let's figure out, why have I been saying that, and why do I think that we should be trading those areas? And so again, I just want to say, nowadays I've been leaving the microphones open. If I seem like I'm going too fast or you don't understand why I put a level somewhere, stop me and ask the question, and I will happily answer any questions you have. But so with that, let's get started. So obviously, like I said, we're starting on Apple. We're starting on the daily time frame. I took all the indicators off. We're going to minimize volume. Indicators are great on daily timeframes as well. We just aren't talking about them tonight. They are another form of support and resistance. That's always how I describe EMAs, SMAs, all of those. They're nothing more than a glorified support and resistance line that has a little bit of math behind it. But so when I pull up a chart, and this doesn't matter what chart it is, no matter who you are and no matter what question you ask me, what do you think of this stock? I get asked it all the time, the very first thing that I am going to do, no matter what, is go to the daily chart. And so if I pull up the daily chart and I don't have any levels on that chart, obviously this is Apple, so I just removed the levels that were there. I would have levels on it, but maybe you're Norvin and you're throwing me some oddball AI trade and you're like, what do you think of this random chart? This is how I will analyze it. And it doesn't matter if it is Apple, if it's SPY, if it's SOS, if it's GameStop. You analyze all charts the same. And so what we're going to do here is mark the major, first thing we're focusing on is the major daily levels. And so what do I mean by major and how do we find them? There's a lot of discussion about the right way to do support and resistance. And, if you're, you want as many touches on a level as you can to mark it as a level. I'm actually in pretty dramatic disagreement with that. I want to identify places where in the market we have had dramatic moves. And what do I mean by dramatic moves? These highs, these lows, those are what I care about. I'll often call them dramatic highs and lows. Some people might call them swing highs and lows. All we care about when we're trying to identify these levels is where did the market stop? And what do I mean by that? Here's a great example. This level right here, we don't care what this was. This was the Japan carry trade unwind gap down. If you do care what it was, we don't care what it was. We don't care about any of that. We care that the market made a dramatic move from right here. It exploded. We aren't saying that Apple hit 195.94 and that's what made it bounce. All we care about is that is where it bounced. And we want to be aware of that when if we ever come back to those levels, that's our support level, a massive support level. You might also notice where I marked this level. I marked it on the bottom of the wick. I mean, did I hit, let's see, the low was 196. I marked 195.94. Obviously, with support and resistance, Shark, thankfully he's back, happy to have that guy back. He described it the best ever. And so I've always used his description with support and resistance. Is there times where you are absolutely going to bottom tick or top tick something and your support and resistance is going to be to the cent? For sure, it is going to happen sometimes. But how Shark described it, anytime you look at the support and resistance level, squint your eyes a little bit. Don't look at it 100% specific. Maybe we bounce at 196.10. Maybe we bounce at 195.90. We don't care that we're right on the money. We care that we're close. And you'll notice I marked the wick. So the wick is where everything happened. And I always try to teach this to people. Some people like to mark the bodies. Is there times and places to mark a body of a candle? Absolutely. But I mark the wick. And why do I mark the wick? Because that is where one side gave up or one side lost. We don't care what caused it. We don't care about any of that. We care that at one point, this candle was an absolutely massive gap down candle. I don't even know what that is, 217 with a gap down to 199, 200. And then it continued selling. Obviously not a lot. Well, I mean, got $5 more, so kind of a lot. Where did that stop? It stopped on this wick. This is where the bears gave up. They were happy with their money, whatever happened. This is where the bears gave up and the bulls took over. So these are the types of things we want to identify. And we want to look for major areas. Next one that we see up here, this major top right up here. We don't care that it's 237.54. I mean, high, this was high, this one was 237.23. We're in the ballpark. We'll scoot that one down a little bit. I always do, when I'm really charting these, I try to get as close as I can. You can even go in there and edit it if you want. But we want to say the market stopped right here and then it started selling. And at one point, this is the exact opposite of this candle. This was a nice gap up candle, was a little bit green, was continuing to push, and this is where it stopped. This is where the bulls quit wanting to buy. So we want to be aware of that level. And so that is what we do across our whole chart. Obviously, this is only a yearly chart on Apple, but anywhere the market took a big bounce or took a big rejection or whatever it was, we want those lines on this chart. So we'll hit that one. I'm actually happy with Apple because I'm going to be able to show you some things that I've done here. So we can see this little wick right here too. I won't always mark these, but when you wind up with a nice little zone like this, that it is very strong. It's two big levels right at the same spot. And then we just continue through the chart. And so what I always tell people to do, if you can't just scan it with your eyes super quick, just move your mouse up and down. And when, your mouse stops going up and starts going down, That's where you're concerned with it. So again, you can see, this is, I don't know what this was, a couple months later. Our big bounce point was this previous level. We've already got it on there. Could you add even another third one right here? Yeah, but I'm not gonna clutter my chart like that personally. Then again, you move it up, you can see we rejected right there. You move it down and you can, we take a nice little bounce here, not really big enough for me to care about it. This turns into consolidation. Now this one, we come way down and we turn it around. And now we take that nice push up. Again, we've already had this level marked from this level. Well, we have another little top here. So now we know we have another nice strong zone right here that if, say we're long going up into that, we really want to trim down that position. So again, sell down, we look for our major turnaround points, always marking. Nice bounce up, sell down. We already have this level from previously. One of the wonderful things about charting a daily chart is you're doing your back testing. If you're a big back tester or anything like that, you're doing it as you go. So we get to say, okay, yeah, we've marked these levels, we've marked these levels. Okay, it worked. When we came back to this level, it worked. We know that. We've now seen it work. So again, we get our turnaround to bounce up. I'm personally probably not going to mark that one. Nice pull down to our same little zone, working again, and they turn us around and they run us. This one, I would actually probably take note of. Something that you need to do, or at least I need to do when I'm charting support and resistance, is a move might not look that, like you guys saw me say, I didn't mark this one because it just wasn't a super dramatic pullback, of $4 or whatever. Well, this one, I can look at this and I can personally quickly glance and see, okay, that was like a $10 pullback on Apple. We care about that. Where did it bounce? Right here. So we get another line on there. Again, push back up, obviously all-time highs. Where did we stop? Great. Selling us back down. And now again, we're going to look at this level and say to ourselves, where did we bounce? Obviously, I'm a little below it. And where do we reject? Well, I probably want another one on here because we sold $30 off of there. Bounces back up. I'm absolutely marking this big wick. Look, if I even would have paid attention, I even would have had another one right there already marked. Sell us back down. We already got the level. Bounce up, sell us back down. Nothing a huge interest right here. Bounces back up. Big dramatic sell down. We're not saying we hit 250 and crushed. We just know we did hit 250 and now we sold heavily off of it. Again, push down, nice big bounce up. Where did it stop? And now they sell us just straight down. Now we can mark another one here. So I'm gonna actually, because I need a little more time, I'm noticing. So I'm gonna add a little more time onto my chart because we need some levels down here because that's obviously where we've come down and started trading. So you always want to go back a little bit and look, what other kind of levels do we have here? And we can see one of our only major ones right there and right there. And here's another major one. Nice one. Major high, market. Major low, market. Major highs, major lows. This is how we mark them. As you get fast, you can cruise through charts and get everything charted. We'll even just mark all of these just for fun so we can go back and see how they performed later in life. So now we've marked all of our Apple chart and now we get to go forward and we've seen all of these working and now we get to come down here to what we've been trading in recently. So your chart might look crowded, but you have to remember this is $70 on Apple. And what do we got? Maybe 20 levels in that range. $75 in Apple, and we got maybe 20 levels in this range. Well, now we can start to see, do our clusters of levels work? And remember, we didn't chart any levels over here. We only charted levels from back in the day. From 2 years ago or a year and a half ago, whatever it was. So we see our levels are still working. We're, maybe we're missing a couple little ones. I'm adding that one. Sells down, stopping, bouncing where we think we should, rip up, stop us where we think they should, sell us down, holding us where they should, bounces us, stopping us, bring us back down. I'm actually probably going to put that on there. I'm not saying we're going to go back to 193, but if we do, even more confirmation of you getting long down there. Bounces are bouncing where they should. Bounces are bouncing where they should. None of this is too, none of this is too clean. you know, this is just consolidation. So now we can see, we don't need to look anywhere on Apple, but these zones, big old cluster of stuff here. Big old cluster of stuff here. Am I bullish on Apple? Have I been telling people to buy all these dips? Absolutely. Now you can see, why was I telling people to buy anytime we got down there below that 195 and really not be short under 200, even though, you know, it kind of makes sense because of these clusters of levels. Now we've taken our nice breakout and push up. Well, we're doing the exact same thing. We rejected virtually exactly where we would expect to today. And now we know we have very big levels overhead. We've learned all this from the daily. And so where do we not want to be getting long Apple? Right here. Anywhere up here, to me, is not a good entry on Apple longs. I know we all are super excited. We think Apple's finally playing catch up. It's what I've been telling people to watch for, is Apple and Amazon to start playing catch up, and then we'll start to see the Qs do some good rallying, and we're seeing it, you know? Well, not to say that the massive rally hasn't been big, but the break of all-time highs, setting new all-time highs, we needed the Apple and Amazon participation because they were some of the last laggards. Obviously Google too, but even Google's ripping now. So getting the nice push on it. And all of this information comes from the daily charts. Obviously, as we start to look in here, I just didn't want to mark these because we want to show that the old levels work time and time again. Well, we obviously have some pretty major tops where we are, and we also have some pretty major bottoms. So again, we want these levels on our charts, you know. Yes, they're daily levels, so they're going to work time and time again. We aren't going to be adding them all the time. That's one of the things. You don't want to be adding the tops of every one of these candles. When we see markets make volatile moves, that's when we want to be trading it. So now the final step of what we do to want to see if what we did worked, what I always tell people to do, go to your 5-minute chart, your 15-minute chart, you know, whatever you prefer. Get you some extra days on there, and then all you want to do is scroll way back. And so how I tell people to analyze charts and make sure their support and resistance is working is just scan the charts with your eyes. Now that you've done this, you know, you have all of your levels, you want to see, are we rejecting close to these? Are we bouncing close to these? When we get below them, do we see breakdowns? Do we sell to those next levels? You know, when we break it again, do we sell to another level? Do we bounce that level? Do we hold that level? You know, we don't necessarily care about, you know, any of that during our back testing. We just want to make sure that our levels try to support us. If they don't support us, they break down and sell to the next one, or they try to give us resistance. And if they do break the resistance, we want to see a little bit of movement over them. And so that is what we do on any and all charts. Anytime you chart support and resistance, start going back through and asking yourself, are these levels working? And if the levels aren't working, then go figure out where you got it on the daily time frame and ask yourself, you know, why aren't those levels working? Are we getting the rejections where we should? Are we getting the bounces where we should? And this is how I do, you know, some people get real hung up in back testing. I'm not some people. I just want to be able to glance at my chart and say, are we getting reactions off of my levels? That's all I care about. Are we, you know, bouncing levels? Or sometimes you're going to completely miss them. Absolutely. But that's fine, because other times you're going to hit them on the money and you're going to catch rippers. We just want as many of these, you know, good, strong, bounceable levels as we can find, and then to actually trade them. And so then when it comes time to trade, you know, I'm going to use a trade that we actually took on Apple, and you guys can see here. Oops. You guys can see, we're going to ignore what happened after I sold. So oops, not the 15-minute. So, I've been obviously pretty bullish on Apple, and what I've been telling most people to do is buy any dips down to your, 198, 199 zone. And short, any of those pushes up there over 200. As we push up into our next big level, our 202 areas, you want to look to be short. So we saw that, and then I believe it was yesterday, maybe it was 2 days ago, we were coming into the open, and we were watching Apple, and people were asking, oh, what do you think on Apple? Do you want to short Apple? And then, oh, Apple's going to break 200. And so what I said to all of them is, hey, I got big levels right below us. I'm going to call the bluff of the breakdown of 200 that we got. We come down to this breakdown level. I said, I'm calling the bluff. And so we bought Apple right here. And is it absolutely knifing? Yes, there's no denying that. You are catching a knife at a certain point, but we know when we go to our daily time frames, where do we want to be buyers? Right here. 198, 199 zone is where we want to buy. It's worked too many times for it to not, for us to not at least give it a try. Of course, where our stops? Right under 198.40. So we know we got about $1 risk or whatever it might be. Really, you could just stop under the 199.70 and wait for a little bit more dip. But we were watching Apple, comes into the day, and so we start getting, we get in there. And then as you can see, we bought Apple calls. And I think I scalped a couple of them. I took a little trim on them. And then we literally sit and watched these things all day long. And then, as we all know, what Apple ended up deciding to do yesterday, we caught this big old massive pop. It pushed all the way to my level. I didn't get a sell. I got sold somewhere right around here. I think we did about 100 to 150 on those. Obviously not a gigantic gain or anything like that, but our daily level gave us our entry, it gave us our stop out, and it gave us the confidence to hold. Did we get absolutely chopped apart for the better part of 3 hours? Yes, but our level never broke. So why would we cut the trade? And then ultimately it worked out really nice. We were able to get 40, 50% out of the trade. So really good trade, all based on daily levels, never had to worry, never had to deal with any of that. So this is what I do on every single stock and how I trade every single day. If we sell down to support, then I'm going to try to buy calls. If we push up to resistance, then I'm going to try to buy puts. Here's an excellent example of it not working. Obviously, I don't think anybody was jumping in front of this Apple train, but obviously didn't work on this one. But this is how I trade every single day, day in and day out. If any of you ever message me and say, hey, what do you think of this chart? Could this happen? And, there's going to be times where people ask me something, should I take this trade? And what I always tell them is, I wouldn't take that trade because of where we are, but maybe your charts tell you different. I have absolutely told people to not take trades that paid huge. And I've also told people that, hey, I wouldn't take that trade because of this, this, and this. And thankfully, the stop out that they had to take, or maybe they didn't take the trade, worked. It's gonna go both ways. One of the interesting things about support and resistance is they're good. They give us entries. They tell us where we should enter, where we should stop out. They are also made to be broken. They will eventually break. So to the best of our abilities, we can buy the dips at these important levels, and then we can sell at our next level or trim at our next level, whatever it might be. And then maybe we short it and we get stopped out. We know the risk. As soon as we're above that level, we look for our next level up. Obviously on Apple, you never want to look for a $7 move in a day, but we want to try to buy dips, or if we break above, we want to try to stay long above. If we break below, we want to look for our lower level. Maybe we don't, maybe we get that in there. Maybe we just consolidate forever. All we know is our levels tell us where to take trades. So when any of you ask me a question, and I say no, no to a trade, that is because my levels are nowhere near where we are. So I call it no man's land. You call it whatever you want. For me, it's a no man's land. So I'm not taking the trade. These are the levels that I care about. These are the levels where I want to get entries. These are the things that matter to me. Well, and Any questions about how I charted that? I mean, it's super simple. If you guys didn't like notice, maybe I should just do one really fast. Let's do AMD. I'm going to show you when you get, when you get your charting of support and resistance figured out. And we're going to get some extra time on here. And we're only going to chart levels from back here. And then we're going to see how they perform. So again, major high, major high, major high. Even that's a major high. This is how I'm really going to do it. When I'm, somebody asks me about a chart, I don't have levels on it. This is exactly what I'm going to do. I'm going to mark all the major highs. Then I'm going to come down to these lows and I'm going to mark all the major lows on the way up. Like this, like this. We'll mark that one. And now we start looking to the right and we do the exact same thing. Major high here, and even got a little bit of a major high here. Keep on pushing. We already had our major highs from previously. We're going to put those ones on there. That's a nice tight little one right there. We're going to put that one on there. Big old major highs here. We'll mark that one, and that'll be our final one. So now we know all of these levels are from the past. So, well, and what we're going to look at is also obviously from the past. But now all we want to see is how do we perform on the way down? So all levels before here. So obviously tops are working. Nice sell down, break, move to our level, push ups. I actually kind of want to put that one on there. Sell back down, major, push up, rejects exactly where we would expect it to. Obviously, this one poked a little bit past it, and so deserves its own level. We're going to put it on there. Push up, close enough. Nice bounce, nice rejections. We'll add that one there for if we ever get back up there. Break below levels, sell to next level, bounce them. We got a little major high there. Levels working. Levels working. Yeah, you could probably mark those ones, but we aren't gonna. Levels working, close enough that the level's working. Nice sell down, bounce exactly where we would hope that it would bounce. If you really zoom out again, we wanted that bounce down here. And then obviously way back up, bouncing where we should, getting some rejection or consolidation where we should, getting some rejections where we should, gapping to one level, gapping to other levels, selling to these levels. You can see here, they work over and over and over again. Obviously, as I said, we've had some nice levels here. So we want to add those and we want to make sure that they're still working over here. Are they making us consolidate? Does everybody understand how we got this? Any questions here? Oh, we got Norvin asking about swings. Give it 10 more minutes, Norvin. We'll get to you. Maybe 15 more minutes. Okay, no questions there. Okay, so now, and we're going to go back to Apple. So now on Apple, we have our daily levels that we care about. We know where we want to be dip buyers. We know where we want to be short rippers. Well, like I said, on Apple, we have some big movement, or not big, but we have some nice movement intraday where you can't just buy 202.87 and say I'm holding it till 206. Might it work? Yes. Well, if you bought it here and then you rode it all the way up and then you sell back down into close, do you end up getting paid the next day? But when you catch a $4 run up and then you ride a $2 sell down into close, not smart trading. You always want to be trimming these contracts if you can, booking your profits if you can. There's nothing worse than watching green go red. I would always rather take my profits and re-enter when the opportunity is provided to me. Well, how do we deal with that? So in the beginning of this, I was discussing how I won't put levels on, I'll take notes of pre-market highs and lows, but they aren't going to find a place on my chart. I don't chart those hourlies. I don't chart those 4 hours. What I use intraday is it's price action, but I don't want to call it visual support and resistance, but I use my eyes to tell me what to do. For example, right here, maybe we buy calls here. So it is no man's land. Our major levels down here at 200, but we're seeing a nice base form. Maybe we decide the risk reward of buying right here with stops under here makes sense because it does. Well, our next level's up here. Great. So we get a trim. Well, now how do we find more levels? What I always tell people and what I will always teach, and it's, the whole idea of charting daily levels is based on this logic of if you want to know what the chart is going to do to the right, look to the left. So we start to look left. I don't know if this is pre-market high or just a high, but we start to look left. We got a bunch of highs over here we couldn't get past. We have a wick over here that we couldn't get past. This wick was an important one, obviously started selling. Well, now we've broken our level. You are insane if you don't trim here. This is a double top. Did it end up breaking above it? Yes, but you're insane if you don't trim here because this would line up for an hourly or a 4-hour support or resistance because it's going to be that high of the candle. So you trim over here. Well, again, we break above this wick right here. And that now becomes your stop loss. If you're long, you want to see us stay above this wick. If we break below it, you can, I don't want to say assume, but you can start to think that the trend might be reversing or at least pulling back. So when we break above this, it now becomes our stop loss. Well, it is a level. You can put this level on, I don't want to say that. It's a level. 204.21. Did it work really good when we broke below it? Did we ultimately sell? Yes. For me, this level does not matter enough to live life on my chart. My daily levels, I have faith that they will provide me reactions time and time again. When I have a level like a pre-market high, I don't know if this is pre-market high. It might work really good today. It might work tomorrow, but it might not work in a few days. And so it just doesn't hold the weight for me. So I do it all visually. I look at it and I say, okay, we rejected big here. We're at 203.85 again. I'm trimming. This was that pre-market high. We take a nice pop above it, that stop gets ratcheted. I'm going to assume the breakout's not going to hold, and I'm going to tighten up the stop. Sometimes it's going to work. Sometimes you're going to get stopped out and it's going to absolutely fly. But this is what I do every single day. Then we can do it on our charts again. Say we buy this dip, hourly 20, we are broken below the level. We know that, this is reasonable enough entry for us because our stop can be nice and tight under us. I mean, we could even just do it, somewhere right under 202. Very tight stop to be buying the dip here. Well, we have one level, but our next level is, again, not until that 206.70. So where do we want to trim? Previous highs. Just like we charted on the daily time frames, getting our support and resistance, we want to pay attention to those intraday as well. This is a 5-minute chart. We don't treat it any different than a daily chart. If we're pushing up to this resistance, we bought the dip here, we trim our level, we're pushing up to here, here's our next trim. Faltering a little bit at VWAP. Well, here's our next high. Here is our next trim. Obviously your stops are well above entry. Here is our next trim. We break above that. That becomes our stop. Where do we target? This high. If you're still in there, that's your next trim. You start pushing up into these highs. Over here is your next trim. I'm not going to put all these levels on my chart. Maybe they work, maybe they don't, but we know buyers showed up around our daily level. This is where sellers had showed up before. So if we're being buyers, we got to assume there's still some sellers sitting here and they might either consolidate us or reject us. So we trim. Same situation here. We know there was sellers here earlier. We can see just by these candles, there's still some sellers in that area. Obviously, when we finally get past those sellers, you get the nice push up. And then ultimately, the rejection comes about where you would expect it to, kind of double toppy, lower high, high a day, whatever it is. But that is the only time I personally use those shorter time frame levels. I use my big daily levels to base all of my trades off, and I use these less major, 5-minute, hourly, 30-minute, charts. Those major points of support or resistance on those short time frames are nothing more to me than trim spots. So does everybody get that? It's pretty simple. Support and resistance, nice and simple. Intraday stuff, nice and simple. You know, learn to trust your eyes. Assume if we rejected somewhere before, we're likely going to try to reject it again. And you know, if we're wrong, we stop out. One of the big advantages to trading these daily levels is we have very, very defined stop outs. And we know that if our levels are working well, then if we take that stop out, we are very, you know, the market should move. As long as our levels are good, the market should move. So, I mean, this one we can't really use. Let's see, where's one where, let's find a nice failure of it. So we've sold down to our level. We bounced back above it. We're kind of breaking this little trend right here. We're going to try to be dip buyers right here. Well, we break back below our level. Yes, we got VWAP and hourly 20 right here. So those could be your wider stops. But say we're trying to buy the dip. Say we're looking for this little trend break to hold for us right here. So we're trying to be the dip buyers. Yeah, we could even say being the dip buyers over here. Well, we know we keep closing below this level, closing around these VWAPs. We want to take our stop out. Why? In case the breakdown comes. Is this a huge sell? No, I mean, what, 70 cents or whatever? Fine. We don't care. We would much rather risk 10 cents and look for a re-entry. You know, maybe we say, hey, we bounced here before. Maybe we'll bounce here again, but we took the early stab. Stop out. Tiny loss. Look for re-entry, cover your loss and more just to get back to where you entered. That's how I'm always going to trade. And then again, move to the daily level. That's all we're looking for right there. So we get to take our trim off right there. And so always going to be daily levels that I'm going to stick with. Always going to be shorter time frame intraday things for targets. So does everybody get that? Oh, we got Norman yapping.
Yes, sir.
Okay, well, with no questions, see my SPY trades from today. I don't honestly. Oh yeah, I gotta be honest. I just took a couple little short scalps on SPY today. I didn't trade it a lot. I scalped a little bit of Nvidia. This was a very boring day for me today. As you can see, very tight bull channel up. You could have bought those dips. You could have shorted those rips. Worked for everybody. Obviously a nice grind start to finish on the day. But nothing too exciting for me. Yeah, right on, Ramsey. Oh yeah, Aaron. God, I swear I saw it. Oh, yep, you're good. Let's see. Yeah, I mean, on it, I like any of these, and I've, you can stay bullish on Apple. Nice push up, but then still regardless, risky spot to be long. Can we pop to that 215 and you get nice and paid, of course, but regardless, risky spot to be long. Oh yeah, definitely do it for Tesla. And the wonderful thing about Tesla is it's just a super, like as funny as it is, it trades super technical. So I mean, it's just absolutely dead money, obviously. But so on something like Tesla, it has extremely obvious major highs and lows, and so you can whack all those on there real quick, get your lows down here. Same thing, doesn't matter what it is. We chart everything the same. That's all we care about. And because, like you said, Tesla, very volatile, makes it super easy to say, okay, where did the market stop and it dumped, or where did the market stop and it ripped, And so then as we go, obviously it was in a downtrend for like the better part of 2 years or whatever. So then as we go into recent times, we can see levels still working. I mean, obviously we missed a couple here, but when we're getting breaks of our big zones, we're ripping. When we're getting to the place where we don't have a ton of levels, we're moving right through it. This is a nice dip down, rip to the upside. Obviously you can have these up here. I don't know if Tesla's going to be seeing all-time highs anytime soon, in my opinion, though. We just want to see these keep working. It's the exact same thing. You'll notice on some of these more volatile names, you're going to start to have some big distances between these major levels. You don't just want to short the break at 326 looking for 314. When you can catch a $7, $8 drop down, we're still going to be using those intraday support and resistances on, for our trim spots on these. But again, bounces to levels, short them, dips to levels, you can buy them. Anytime we get down into these more major zones, like yesterday, it's likely a pretty good dip buy. I think that was yesterday, likely a pretty good dip buy on Tesla. Oh yeah, now we took the ripper off the open, but treat it all the same. Doesn't matter if it's Tesla, doesn't matter if it's AT&T, doesn't matter if it's SPY. We do everything the same. Check out Mara. Yeah, it's another one. Tricky place to be long. Beautiful breakout. Unless you were long on it. Unfortunate that it made this move so fast on the way up. 18, in my opinion, I could even slap that on there. 18 to that 1830 range, going to be pretty dang tricky to get by. Miners, not a popular trade, not a lot of reason to be in them. I will say the fact that Mara is trying to, I won't say switch from mining, but no longer just to be a miner and gradually move into a Bitcoin holding company as well. I think that's going to be good for him, but horrible financials behind these things, horrible guidance out of these things. So tricky one to be too overly bullish on. I've been, God, it's been the better part of a couple of years now. Whenever the last halving was. So whenever last halving was when I told people don't be long on miners anymore. They can't make money. And so that's what we've kind of seen. So this 18 level, not where I'm getting long. We can break that 1830 level. I'll definitely look for that move up to 19, but I'm not long and staying long here personally. Yeah, Webull, let's check it out. Absolutely fine. Not sure why just yet. I will say that 14, I know we cracked it. Let's see if we can hold on to it is really what I'd be watching for. So breaking the 14, big level, 1426 rather, sorry, was kind of my level. Obviously worked into that end today. Ripping again after hours. Not sure what this is ripping on, not exactly sure why it's ripping. If we get above here, and I know we're in it past it after hours, just to reemphasize that. If we get above there and we hold above there, this thing will get to move. And I would imagine you'll kind of you'll end up getting up here somewhere, maybe this 1520 area, 1520 area if we want to keep pushing. However, I'm not sure why it's running or anything like that. So we'll have to see what happens. But if you're long, already been long, start to use these 14 levels as your stop outs. Any breaks below 14, you probably want to be getting out of that thing. ANET, you keep asking about it. Didn't you ask me about this one in voice chat today and we already went over it? Yeah. Oh yeah, dude. And what did I tell you in voice chat this morning? Norman, I said, buy the trend. So you already know my stance on it. And this is already charting from you. It ripped all the way to the level where I would no longer want to be long personally, but if we get back above that 101, look for that one at 320. Why not? But don't get long here, Could this be the breakout? Sure, but we'd need some confirmation to tell us it's the breakout to start looking for that move back to 108. But be careful there. Nice ribbon. Bulls ribbon because you sold, huh? APP, well, you can see I basically have one level that I care about on this chart, apparently.
Yo, River, can you check the last one for me? Macy's?
Oh, Advanced Auto Parts, AAP. Oh, look at that thing. Well, there's the level I cared about on AAP. Wow. That thing's on a heater. Need that trend break. Long it on when it dips back down here to 45, like it's probably gonna long that 45 dip, 44, 45 dip. And then look for that trend break back to the upside and run it back to that 5 or 54. Nice one there. Thanks, Dan. I appreciate that. Okay, well, if that's gonna do it, thank you, everybody. I appreciate you being here. I see a few people leaving. Oh, Dan, was that you talking to me about this in voice chat, or was that the last lecture? Wow. Yeah, thank you, everybody. Wow, they actually kind of gave that dip. Did you buy the dip today? Oh no, you've been in there. You've been in there. You had a sick entry. Didn't you have like a 50s entry or something like that? Wow, yeah, that thing's on a heater. Well, it's likely, like we talked, hold above that 77, and I gotta believe that we're gonna run back up to that 80. Little hang up 78, right where we slowed down, but I bet we're gonna head back to that 80. Macy's. I haven't looked at that one in a long time. Look at the last time I was trading Macy's. Wow. Wait, Norvin. This could be a trade. Every once in a while, Norvin comes with one, huh? This one could be a trade. Wow. Big trend still way up there. Nice trend break with the retest right there. God, that was the entry with stops under 10. Get this over 1280, 13 zone. Look for a pop. Terrible entry right here. I mean, with all these highs, you know, you want that confirmation above it.
Yeah, I'm looking at some leaps for next year.
Well, don't
In the money, $13 call.
I mean, don't buy leaps after it literally just ran 20% in a week. You know, that's not the time to buy leaps. You want to buy leaps, and don't get me wrong, this thing is throttled from its highs, but you don't want to buy leaps on the top. You know, I'm happy that people are like talking about leaps in the group recently, but you don't buy leaps during the run. You know, you don't like you want to look for value when you're buying leaps. You don't want to buy them when we've already rallied 20%, you know? It's even like this one was a tricky one. Oscar, you know, obviously throttled on throttled on that news. But look at this chart. I mean, like we just look at this chart and we have to ask ourselves on this chart, where do we want to be most cautious getting long? Anywhere up here is, in my opinion, not where you get long on it. Today, if we dump this all the way to 15, maybe even for sure at 15, but up here, if you're buying that 21, 22, I mean, you're chasing such a big move to the upside. Can it come? Yes. But you have to think you're buying 21 and your upsides to 2350 and your downsides to, you know, 1893 or 1750 or whatever it is. You got at best a 1-to-1 risk reward trade, but very likely higher risk than reward, you know. Check out PaySign. You're gonna have to tell me what the ticker for old PaySign is. I've never even heard of it. Pays. What do you want me to tell you? I got nothing to tell you here. Thing's exploding. It's up, what is that, 700% off those lows? I know, only 330%? How can that be from, oh, because it's almost at $2. I thought it was at $1. So it's up 330 something percent. I'm assuming that there's some sort of news going on there. I mean, it's probably going to go to that 826. If it goes to that 826, it's probably going to fill the gap to 956. It'll hold up right there. Wow, thing is just exploding.
I was trading Costco today, River. What's your thoughts on Costco? The best.
Always bullish on Costco. Always bullish on Costco. How do I trade pennants? I don't trade pennants. I don't trade. The only named patterns I trade are double tops and double bottoms. The issue with all patterns, you know, bull flags, bear flags, bull pennants, whatever it is, there's a word attached to them that builds a bias. And when you build a bias, you start expecting something to happen and you you know, like I joke all the time. One of my favorite trades available is calls on a bear flag because they have low success rates. All patterns have low success rates. The highest success rate of any pattern, double tops and double bottoms. So that's why I stick with those. When you start looking into all your others, your pennants, your bull flags, your bear flags, your head and shoulders, you're really talking a 50 or 60% success rate, which to me is not high enough to give me any concern. Will I sometimes draw a top and bottom trend? Yeah, but I'm not thinking of it like a pattern, you know? I mean, think of like, you know, think of the people who were trading the rising wedge all day long today, you know, and how they were just blown out all day long. So I personally steer clear of them. But as with anything, you short trends on highs and you buy trends on lows. Doesn't matter what it is. T. Yeah, let's check out T real quick. Ooh, it got smoked today, huh? I hadn't even
Yo.
looked at T.
Yo, River, why you gotta call out Joe like that, bro?
Who'd I call out, Joe? Oh, who asked about the pennant? No. Oh, or Joe who? I don't know what you're talking about. I don't know. I don't know what I did this time. Man, that is a rough breakdown on T. Oh, they finally did their DirecTV deal. Oh, honestly, let it dip a couple more days. Hopefully they give us 2760 again. We'll try it down here again. Give it a couple days though, because that's gonna do some interesting stuff for that's gonna do some interesting stuff for their financials, in my opinion. C, some Citigroup. Yeah, it's been on a heater. I mean, I don't know if that's all-time highs, but you know, recent highs. They're making it very, very. Oh, you're on the 77.5s. Is that what you're saying?
Yo, River, I always wanted to ask you,
Hold on, Norvin.
oh, all right.
Hold on, Norvin. If you're on the 77.5s, you're up so fucking disgustingly. Stop if we break back below this previous high. Otherwise, ride them things. Right on, Maxwell. Yeah, happy I could help. Yeah,
Hey,
crash
yeah,
miss.
take care.
Exactly, crash miss. Nothing worse than a bull flag or a bear flag, in my opinion. They're so unsuccessful. You know, that I steer clear. Okay, Norvin, what you got for me?
So, I see that you love AT&T so much. The real question is, what's your cell phone carrier? Don't tell
Well,
me.
it's not AT&T. It is not AT&T. Okay, well, you guys, if that's gonna do it, thank you all for being here. I appreciate it. Love talking support and resistance. I know we've lost about 20 people already, but I just want to put it out there. Practice this. Send me charts. That's what I try to tell everybody to do. Go try this. Send me a chart. Anybody can do this. Anybody can trade this effectively. Go try it out. And if you have any questions, always feel free to shoot me a DM. And with that, we will catch you all in the morning. Thank you so much.
Thank you, River. You have a good night, brother.
Yeah, you too, Narvin. We'll talk to you guys tomorrow. Yep, right on, everybody. Thank you. Thank you. We'll talk to you soon.